I expected the ETF launch to be successful, but I think it's quite impressive just how successful it's been. At this point, we can see that these ETFs are going to surpass gold ETFs in not too long a time. The Bitcoin ETFs are the most successful ETF launch in 30 years, and apparently in the first 30 days, they outperformed every other ETF. They've crawled to the top of 3,500 competitors in short order. And I think that they have sparked the bull run and the upward movement in the price. I mean, definitely there's a huge amount of institutional capital flowing into Bitcoin right now that is driving the price because of asset scarcity. I think the most important thing or the most important result of this is the ETFs themselves represent regulatory clarity for Bitcoin as the institutional grade crypto asset. I think that's a very important thing. I think secondarily, the ETFs represent an on-ramp for institutional money, and they open up a gateway between $100 trillion or more of institutional money and Bitcoin. I think the third thing is they have sparked this price action, and as Bitcoin moves back toward its all-time high, they have generated an extraordinary amount of media coverage and Wall Street awareness, and Bitcoin benefits from the awareness of the asset class, because as of now, 99% of the mainstream investors really have an incomplete understanding of Bitcoin, and the best thing that we could do is just build awareness that it is an asset class, and then people will start to do the work to understand what it is. And so all three of those things have been catalyzed over the past month by these ETF launches.
비트코인 ETF가 열렸습니다. 판도라의 상자이죠. 이제 돌아갈 수 없습니다. 기관 자본의 쓰나미가 비트코인으로 쏟아져 들어왔고 이제 막을 수 없게 되었습니다. 이것은 최근 마이클세일러가 보낸 근황 메시지입니다. 세일러는 하락장에서 얻은 가장 큰 교훈을 공유하면서 소음을 무시하고 시장 변동 중에서도 비트코인을 파는 걸 자제하는 것의 중요성을 강조했습니다. 마이클은 자신의 신념을 굳건히 유지하고 있습니다. 그는 심지어 돈은 해롭다고 선언하면서 개인들에게 전통적인 통화와의 관계를 제고하고 비트코인의 변혁적인 힘을 받아들이라고 합니다.
We thought that maybe Bitcoin was a competitor to gold, but it's actually run up the leaderboard, and now it's starting to nip at the heels of the S&P 500 index ETFs. If you're looking for an analogy, imagine a business without a website. It was pools of money without an ETF ticker were mutual funds. So if we look at the history of investing, we kind of went from buy the stocks individually to trust a money manager with a mutual fund, and the mutual funds made Fidelity. And then 30 years later, the ETF came along, and it was a universal API that you could use to trade a mutual fund. So in the mutual fund world, it takes you a few days or a week or 2 weeks to set up an account, and it takes you a few days to move your money in the mutual fund, and you have to redeem your money, and it takes you a week to get your money out. And so it was a very slow, low frequency relationship. And the typical investor is going to just do business with one company like Fidelity. When the ETFs came along, you could have any stock trading app, and you could trade from one fund to another fund. You could trade, in and out of funds 6 times a day. You could every day say, well, I want to buy this thing from Fidelity, this thing from BlackRock, this thing from Vanguard. And you could put those funds in the same watch list as your Apple stock or your Google stock. So it's kind of the same impact the internet had, which is, there's a retail store, there's a restaurant, what's the website? Like, I want to say, let's go to a restaurant, you go check out the website, it says this is where it is, this is how long it is, these are pictures of it, this is the menu of it. Now, imagine I tell you we're going to meet at a hotel or in a restaurant and there's no website.
Yeah.
You're like, no. Like your reaction is, so how am I supposed to figure it out? Like, well, you get on a plane and you fly there and you walk through the door and you ask for the menu and at that point they tell you what it is. You think that just seems so 20th century. So, you're laughing, but like you can't do business without a website. The website is the universal API of information. That ETF ticker is the financial API for an investor. And so that has been extraordinarily successful, but Bitcoin, it's like Bitcoin didn't have a website, right? Bitcoin didn't have a website for institutional investors, and about a month ago, Bitcoin all of a sudden became something. You type it into, your Bloomberg, you type it into your Robinhood app, or you type it into any stock, E-Trade or any stock trading app, instant information. You can buy, you can sell. And of course, those ETF tickers, they don't just give people, perfect awareness and ability to transact. That's also the global protocol for trading volatility or for issuing credit. So if I had a bunch of money in Bitcoin and I wanted to get a loan against it, it might take me a month or 2 months to find someone that will give me a loan. Then I have to move to Bitcoin. Then I have to pay double the interest rate that's normal. And that's kind of scary. But after the ETF, people could have the same economic value in Bitcoin with JP Morgan or Merrill Lynch or Bank of America. And they could just say to this broker or banker they've been doing business with, like, I bought a house, I want a big mortgage on it, and I'm going to post a little bit of my Bitcoin as or securities as down payment against that mortgage, and I use it to get a mortgage, or I use it to get a margin loan, or maybe I could use it, I could hedge against it. And so these ETFs opened up an entire financial world of awareness and opportunity and functionality to the 99% mainstream investors. And you really can't underestimate just how profoundly important that is to the entire network. Yeah, I think that ETFs are just another application of Bitcoin, and there are thousands and thousands of applications coming. So in this particular case, 1% of Bitcoin, 1% more assets kind of flowed into the ETFs. It boosted the price of Bitcoin in the last 2 months by $20,000 a coin. And that means that 99% of the $200 billion of market cap got created, and something like 99.7% of the benefit was for the people that didn't own the ETF. If you think about it, yeah. And once you do the math, the ETF people bought in at 40,000 and drove the price to 60,000 and have 1%, and everybody else had the other 99% and their Bitcoin is worth 60,000. So in this particular case, if that's taking over Bitcoin by basically making all the people that don't use ETFs $200 billion richer, right? Then you probably want that to happen 100 more times. You'll see other apps. At some point, an insurance company will build Bitcoin into an insurance policy. And then companies will build Bitcoin into their balance sheet. And then a country, and if a country that you don't like buys 1% of the Bitcoin supply and drives up the price by a factor of 2, it'll be another example of every other country getting 99% of the benefit. So as people embrace the Bitcoin network, and as they build applications on it, and as they invest in it, it's impossible for them to take it over because the network outside of the new actor is actually getting more powerful at a faster rate, and it actually empowered the non-ETF holders 100x more than it empowered the ETF holders. So it's not a fear I have. I think that every single new participant just makes the entire network better and more successful, and empowers every other type of Bitcoiner. I think the lesson of Bitcoin is the best asset. There is no second best asset. buy Bitcoin, keep buying Bitcoin, don't sell the Bitcoin.